Hello, everybody. Welcome to another edition of Real Estate on Tap.
Real Estate on Tap.
Cheers to you. Hope everybody is having a great rainy Wednesday. Can't complain. We do need the rain.
Yes, we do. Kevin and Allison Marciniak with the Marciniak Team here. Today we are going to talk about, well, basically what happens if you start falling behind on payments.
So mortgages, struggling with your mortgage payments, things that you can do.
And there's sometimes it's the unknown that happens. You lose a job. Maybe you have a child and mom can't work anymore. Many different things that can happen in people's lives. Losing income, somebody passing away or something like that. So we just wanted to kind of tell you there are options out there. Everybody thinks doom and gloom, and that's not the case. And before you go into the worst case scenario, foreclosure, there are basically things you can do before that. And foreclosure is the worst thing you can do because it does screw up your credit. And you cannot buy a house for 7 years.
7 years.
And
that is still accurate. Yes, I believe it is 7 years.
Yep. And actually, both of us have been in that marketplace. Ellie, not a licensed real estate agent, but worked on a team who did a lot of the distressed properties back in 2006 and 7 when we had our financial crisis in the housing market. I got in at that market, in that market, and I learned basically on the fly, but I did obtain a designation, the CDPE, which means I'm a certified distress property expert, and I earned that designation because we dealt with a lot of short sales, whether we were on the buyer side or the seller side. And again, there's a lot of things you can do before you have to go to foreclosure. So that's what we want to talk to you today about. I know it's not a warm and fuzzy subject, but you may know somebody. You may be behind in your payments yourself with the cost of living right now. That's just, it's part of life, and we all get there where we feel stuck, and there are options. So that's what we're going to talk about today.
And just so everybody knows, we are not financial advisors. We are not giving you legal advice or anything in that order. We're just throwing things back and forth, what we've experienced, what we know can help, things in that regard.
Correct. Thank you for that.
Yes, definitely.
So, again, if anybody's got any questions out there, feel free to chime in. We'd be happy to try to answer them or have a personal and private conversation with you guys. So, feel free to call. With that said, why people are struggling right now, we have the higher interest rates. You might have bought, a couple years ago, you might have gotten to what we call an ARM or an adjustable rate mortgage. That mortgage may very well been in the 4 or 5s, and you stayed in the property a lot longer than what you either thought, or interest rates didn't drop like everybody thought. So that ARM reset can significantly hurt the cost of what that mortgage payment was to what it is now, and that is one of the big things that people financially basically can't afford anymore. So. That's one of them. The affordability crunch that we're all dealing with, whether it be gas, cost of living, food, those things that we need to.
Everything is rising.
Yep. Well, everything's rising, the cost of everything. So that might have a real big effect, basically, on your, what funds you have to be able to pay that mortgage. And believe me, the roof over your head is the last thing you're going to default on. And that's stats out there. So, your car is going to be one of them. Other things that you may or may not have to pay for. We all need food to live. We all need water to live. And we all need a roof over our head. So, typically, again, that is that's the last thing to, be paid. But, we do have some of those issues.
Snowmobiles. Yes, snowmobiles.
Thanks, Daryl. Job loss, unemployment, again, medical issues.
Taxes, insurance, all rising.
Yep. But those are, again, gonna be put an effect on what you, what your mortgage payment is going to be, and escrow increases. We also in taxes. Taxes have been, especially in the state of Wisconsin, have been going up and up and up, and that has a big effect on, you got your principal and interest that stays the same and locked, but your insurance and taxes have been going up. So again, that affordability crunch that you have.
Yep. And some people don't even realize that, that it could be happening to them. What are they doing that could cause something? You're using credit cards to pay for your mortgages. You're offsetting things when you should be doing this or that, things in that regard.
So yeah, again, we're here to talk about the options. So, right now foreclosures are relatively low and non-existent, but they are out there and they've been rising over the past couple of years. So again, we want to basically make sure that's your last resort, that we can, again, going to talk about a few things that we can do to help salvage this. So one of your first steps that you can take immediately, call your servicer, your mortgage servicee. So again, when you use a mortgage broker, a lender, a lot of times they will sell your mortgages, they'll pack them up and sell your mortgages off to a different service provider. All that service provider does is holds that note, and you are the one who you're the one who makes the payment to them. So first place that you want to go to is say, and give them a call and explain your situation, what happened. And they're going to want some documentation. This isn't just
and you want to be
willy-nilly.
open. You want to be honest. You want to tell them the entire, everything. You don't leave anything out, because they 9 times out of 10 are willing to work with you. So they're definitely gonna want a lot of information from you. But being open and honest with them is the key right there.
That's the step number one.
Yep, definitely. And there's different things that they can do for you. Sometimes they're willing to push a payment to the back end.
Forbearance, they might give you just a couple months to catch up on payments where you don't have to make a payment. And again, they're going to want their money, but they're willing to work and say, hey, I understand you're going through a rough time, and we'll give you 3 months of excused payments and allow you to catch up at a later point. So that would be your first option. Talk to your servicer. Again, be open and honest with them. Explain the situation to them, whether it be medical, death in the family, loss in income, life-changing instances, kind of what they want to see. And again, they're going to want proof. So this can't be willy-nilly just, I just can't make my payment anymore.
I decided to go to the casino instead and pay my
double
my
down
mortgage.
on the mortgage. Yep, double down.
Yeah,
not a good idea.
Loan modifications is definitely something else where they're willing to look at everything. Again, any of these options, they're going to ask for a lot of paperwork, but you're going to have to do it if you want them to work with you. Tax returns, bank statements, pay stubs, things like that. But loan modification is changing basically the terms of your original mortgage to see if they are better than what you had previously.
Yep. So, and they can either be a short-term rate drop, rate drop itself. They again are creative on what they're willing to do, because honestly, the bank doesn't want to take your house. The servicer doesn't want to take your house. That's the last thing that we've learned a lot back through the financial crisis, where a lot of these banks took back these homes and the disrepair. They suffered a lot. Whether it be vandalism, theft, people breaking in these houses, doing damage, taking the copper pipes, taking the copper wire,
taking water heaters. I've seen water heaters go down the street.
We've seen a lot of crazy things, and again, having a house that sits there, nobody's maintaining. Making sure the gutters, a lot of times We Energies will pull the energy. Now the sump pump's not working, so the basement gets flooded. Or in the wintertime, you leave the house and those pipes are frozen. So they've learned that is not the best case scenario. They do not want to do that at all. And again, they want to keep somebody in that house they want to work with you. So, they will do loan modifications for you. Refinancing.
Yep.
No,
depending on where your rates are.
Yep. You'd obviously don't want to refinance from 3 or 4% to today's rates sitting around 6.5%.
Right.
But they may refinance you and cut you a break and do things like that. So another option. But if you are sitting at 6, 6.5 or 7%, or you had an arm that adjusted, that's been adjusting to 7 or 8% interest rate, refinance to that 6.5% interest rate to save yourself some money.
Yeah, definitely. Yeah.
Repayment plan basically is just to say, okay, we're gonna, you're gonna catch up over time.
Sometimes they'll add a little bit a little bit to your payment to make up the different, again, they'll give you a little bit of allowance and then add, $20, or, $15, whatever it might be to make up those difference so you don't hit foreclosure and you're eventually going to repay them back. Yep. So,
short sale.
if you are stuck and there's no other alternatives, there's also a short sale, which is definitely better than a foreclosure.
I think it's 3 years on a short sale. If you do a short sale, 3 years to get back into the market or buy a house. Less damage to your credit, that's for sure. And what a short sale basically is that you're negotiating with the service provider or how many lien holders that you may have. The first lien holder, number one, is always the government taxes. Okay. Second lien holder is going to be your basically your mortgage, and then you might have a third lien holder, which could be a HELOC on the home. So when we talk about short sales, basically you go to the first lien holder, and again, they're going to want to make sure taxes and the government's all paid up because again, they're the ones who can foreclose first. But you have the ability to go to them and say, okay, would you be willing to accept less than what the property's what's owed on the property? Okay,
and forgive
yes.
the remainder.
Yep.
Yes.
That's a key word, is forgive the remainder. So for instance, let's just say your house is worth, let's use simple math, $500,000. Let's say you've only been in your house for a couple of years. Majority of your payments went towards interest. So you owe now, let's say $480 on it, but you took a home equity line of credit for $40,000. Or you might have some other, mechanic liens that maybe somebody had to fix your furnace, maybe somebody had to do a roof repair, so on and so forth. Those might become liens too if you never paid the contractors. But again, it's a negotiation to say, okay, the house we believe can sell for X amount of dollars. And then the first lien holder will say, yeah, I'm willing to accept less than what you owe me back in full. And then they find out the other lien holders, because the way the lien holders work, the second and third might not get anything at all, or might have to agree to get a couple $100 or so on and so forth. So there's a negotiation that goes on there. Short sales can basically take anywhere from 2 months to
a year,
9 months, a year. Depends on who you're dealing with. If it's a local servicer,
a little quicker,
or a smaller servicer. Bank. But if you're a bigger bank, it can take a long time. So just be aware that these do take time, but again, it's one way to get you out of the financial trouble.
And if you do a short sale, you obviously have to make all parties involved aware of that, such as the buyer, because the buyer has to be willing to stick in that entire length that they take. So, once we get what your house is worth, then you go to the bank and say, okay, now I have an offer for this or whatever it might be, and the buyer has to be able to stretch that time out as well.
Yeah, so you don't need to be, in other words, if you got an apartment that your lease is up in a month, that's probably not the way that the buyer want to go with. But if you got time and you really love the house and you say, yeah, okay, I'm willing to stick with this, you try to get it at a little bit better a price. Again, that can all be worked with. And if you're a seller and we know it's a short sale from up front, a lot of times we can do a lot of the leg work to have title pulled right away. That way we can find out what the liens are out there, and then do a breakdown of all the expenses, and then go start negotiating up front or giving them a closing statement, so that the bank can make a decision based upon that, because again, they do not want these homes.
Right. And if a short sale doesn't work, or it's not something that you want to do, then there's also what's called a deed in lieu. But again, the bank has to be on board with this. And this is basically saying, all right, here's your keys back, or here's the keys back. I don't want it. It's not as bad as a foreclosure either. Again, it's under only certain circumstances that they're willing to do that. And again, every bank is different. So,
Yep.
Couple options out there.
And if you have a government-backed loan, FHA, VA type loan, there are programs out there
that will help you.
Yep, and one of them is the again, HUD is a housing urban development. They have counselors available that can help you out and work through something with the government-backed loan to, again, they want to work with you. They want to get you back on your feet so you can continue to pay your mortgage and keep you in that house and a roof over your head.
There's also nonprofits out there
Yep.
that are willing to step in and help, especially if you are a veteran. I believe Hope Hotline is one of them. Definitely, I think we have a phone number. It is
888-995-HOPE. Again, that's a nonprofit that will help you, again, stay in that home. They'll work with you to work out
some kind of loan program that, and then, also we will post the phone numbers in the comments at the end.
Yep.
So just keep that in mind.
and a How to Improve hotline, and veterans also have access to those hotlines also to, again, work with them, keep you in that house. One of the things they're also going to want to ask is a budget, and, as we all, like to put things on credit cards and, spend, you'll relook at your budget. What can you cut out of your budget to, make those payments until you get back on your feet?
Snowmobiles.
Not snowmobiles. Let's not go there. But there's things that, again, they're going to want to see from you, and those counseling will make you do a 6-month budget or a year budget to say, where's your money going? What can we cut back on? So again, these are for people who are in distress, truly in distress.
Yep, definitely.
Things you can do to prevent yourself from getting in that. We all live paycheck to paycheck, and we shouldn't be doing that. So establishing yourself a 3 to 5 month, reserve funds for emergency, whether that be a medical expense, whether that be a short-term job loss. Those are the things that you want to, have that reserve fund so you can, keep that roof over your head.
But again, not everybody can do that. So there are different ways around that as well.
Again, just some ideas out there. Other things you can do, we talked about the bi-weekly payments, doing the extra payment too, to, continue to beat down that interest and pay off your mortgage quicker. We talked about doing a recast. Let's say you do have some money that you saved up, and you're saying, well, I'd like to reset my principal and interest. And I say, but reset, your interest rate stays exactly the same, but your principal and interest that you'd be paying if you fell in some money, okay? Maybe Uncle Johnny died, and you got this lump sum, and you're saying, well, what do I do with it? We could have one big party, but that's probably not a good idea. So you could do a mortgage recast. And what a mortgage recast does is it resets your payment. So let's, for example, again, easy math, let's say your payment's $3,000. They can reset that payment to be $2,500, which maybe make you a little bit more comfortable for continuing to make payments. And again, the other things you can do is get a little side hustle going. I know the wife here, she's got a little t-shirt, and she makes these wonderful cups here too.
It is not a side hustle. Do not hire me. I enjoy it. I don't want it as a job, but there are different things that you could do, for extra cash in your pockets. Absolutely.
And, review your insurance, maybe go shop for insurance. Maybe you can save yourself for a couple $100, or make your deductible instead of $1,000. You could do it a $3,000 or a $5,000 deductible. So talk to your insurance agent about that.
And going with the tax aspect of it, if your taxes totally kicked up this year, if they're saying your house is worth this much and you're saying no, probably not, having the assessors come back in and reassess your house to see if they can lower your tax amount.
And look at your assessment. How many mistakes do I find in assessments?
Definitely.
Sometimes they're the positive for you, but sometimes they're the negative also. So if you feel that your assessment's way out of whack with whether the homes are selling around you, it might be a good time to sit down with them and bring them in and say, you guys are overcharging me, and have them look around to see what's going on. So another way to, again, drop your payments.
Yep, your tax, because obviously you pay your taxes and insurance and your payments, definitely. What other?
I think that's it. Again, don't think foreclosure is your only option. Again, we are experiencing short sales. we can help you out. We can look at what your options are, and again, try to get yourself.
Watch the rates as well.
Yep,
That was
and
another thing. Watch your rate. Watch the rates that are happening. You know?
The rule of thumb has always been 1 point, but again, if
you're struggling
between you and keeping the house and not keeping your house, if it's a couple $100, well, again, we know some lenders that I'm sure would be willing to help you out and work with you to try to, again, get that payment to where you need to be to keep you in that house.
Definitely.
Last thing here, thanks for joining. We do have an e-recycling event coming up on Saturday. That's at our office located on 103rd in Oklahoma. So the address is 10303 West Oklahoma Avenue, and that's in Milwaukee, Wisconsin.
And it's from
53227.
It's from 10 to 12.
10 to 12.
You just literally drive in, drop off your unused or unwanted, I should say, electronics. TVs, monitors, stereos, speakers, cell phones,
old computers, anything
pagers.
electronic wise that you don't want to throw in the dump. You want to, care about the earth.
Yep.
And it's free and it's open to the public and it's absolutely free.
Yep.
Drop it off. We're sponsoring it. We actually have some team members. I think Ryan and Nick will be there, and a couple other of the Remax Lakeside agents. So again, that's a free event. Come join us, and that's put on by the Camo Crew. So thank you guys very much for sponsoring that also and keeping those nasty chemicals out of the dump, and putting it to good use and recycling what they can.
Yeah. And if you guys have, obviously, privately, if you would like to message us, if you have questions on how we can help you, do not hesitate. We do not judge. We are here for you. We've got resources that will help you point you in the right direction.
And our conversations are confidential.
Absolutely.
So
Absolutely.
Keep that in mind. And again, we'd love to be able to help you out because
everybody
falls on hard times. And we want to make sure that we can get you back on your feet and keep you in that house. Or worst case scenario, we have to sell it. But again, doing as least amount of damage as we possibly can to, again, make you be back a homeowner when you get back on your feet.
And we will post the phone numbers that we have available in the comment section for you guys.
Along with the e-recycle brochure for you guys, so you guys can take a look.
I did post that on my personal page as well, if you follow me that way.
All right.
All right, guys.
With that said, happy Wednesday. Thanks for joining Real Estate on Tap. Kevin and Allison,
Marciniak. Have a great night.
Thank you much.
Stay dry.
Bye now.